This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Tuesday, November 22nd, 2022, and we're so glad you could join us for today's show. And in today's episode, I will speak with Josh Linville. He is the Vice President of Fertilizer at StoneX, and we are going to talk about the current state of affairs when it comes to fertilizer across the country, some of those shortages we've been hearing about, the high prices, and some potential pitfalls for moving fertilizer in 2023. We will also take a look at the ag weather outlook, but first, let's run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day, we are joined by Jacob Burks of agmarket.net. Jacob, it's been a little bit of a quiet week, it seems like, in the lead up to Thanksgiving. Was that the continuation of the story again today on the grain market?
Oh yeah, it was. Very quiet here. I mean, we're in a 7-cent range in the corn market. Beans are holding in there at 15-cent range. Really quiet into this day. The wheat market probably had the most movement today, 10-12 lower across the Kansas City wheat. Chicago was down 6, but all in all, it was all red. Had an ugly red day. The soybean complex is still continuing to see some crush change. Got the soybean oil up of 85 points with the meal down about 2. So yesterday we saw a pretty relatively strong day in the face of a lot of headlines flying around by the soybeans, and then today we just quiet, looking for a story.
And yesterday we did see some movement as far as crude oil is concerned, and we know that corn and soybeans, they're closely linked to those fuel, what we see in the fuel market. So was that the case today for the grains? Did we see some movement in reaction to that?
But yes and no. I mean, we just didn't have a whole lot of activity in the oil market. I mean, we're up $1.15 right now. It's still some follow through from yesterday's headlines, and then going to the headlines is regarding the Saudi Arabia situation, where the Wall Street Journal released an article stating that they were going to be cutting production. And at the end of the day, they said no, we're not. We're keeping everything in place. So the crude oil really rallied strong off of that after we've seen about 3 or 4 days of it falling. It went down and tested some old support down around $75. So beans rallied off that significantly. And it's all about this soybean oil and the biofuels, and there's a lot of different things that we're watching, whether it's what's going to be released and exported out of the Ukraine area. It's what the South American situation is going to be using. They came out today and said the new political regime that's coming in, the new president, stating the fact that he's going to be looking at not increasing the biofuel mandates at this point, waiting until keeping it status quo, where the last thought we were going to have more, going to like a 14 to 15%. So a lot of stories out there about what's going on in the biofuel industry and what kind of demand we're going to see for soybeans in the near future. So there's things going around, but today the news was relatively quiet. We just had a kind of status quo day.
And on the Mississippi River, we have seen an increase in barge traffic. Whether or not, I guess, Jacob, that's even enough to necessarily change things a lot as far as the markets are concerned, at least we are seeing an increase in traffic, and that's good news, right?
Absolutely. I mean, what we're looking at, from an export standpoint is, beans right now that we've seen a relatively normal pace as far as bean traffic goes. The river flow in the lower Mississippi really reflects, what comes down to Illinois and Ohio and down and continues to go through the winter. Get up here in our area and you start seeing, most of their needs are met. They're not really buying a whole lot of new stuff right now as harvest is wrapping up in the upper part of the Mississippi River. And you start getting everything kind of locked up anyway, just due to ice and just due to weather and maintenance concerns on the lock and dams. So movement is good. Yes. We had a chart on our meeting on Monday showed the flow in the next 20 days, though. If you don't get a lot of rain, that river level will be back down to problematic levels. So it's going to need to continue to get some rain to keep that flow moving. But yes, things are moving. As we get into our corn major export time into the spring, man, you really hope that flow from the Illinois area down to the Gulf can stay open, so we can keep that. Well, first of all, we got to have China and others come in and buy some of our corn. That'd be helpful too.
And of course, I hate to say it, but a little bit of snow this winter that would melt in the spring and help that river out as well would go a long ways. But we'll get to that when we get there. Jacob, what did you see on the livestock side of the markets today?
Same type of story. This is pre-holiday, trading. A lot of times you can see a lot of volatility due to the lack of volume in the marketplace. This is not the case. It's been lack of volume, lack of moving, which is okay sometimes as you go into these holiday times. Just shortened day on Friday. Tomorrow, everybody's heading out early for a long weekend. But you do keep your eyes peeled to this marketplace. I mean, Friday is option expiration day. December is a very popular month for grain options. You kind of watch these markets as you get into some of this, even grain movement affecting the livestock market. But all in all, the cattle market was pretty mixed. We saw the front months starting to come into like some bull spreads where we're seeing the front months higher than the back months. But 30, 40 cents lower across most of the cattle complex, 50 cents lower in some of the feeder cattle. Your hog market was pretty mixed as well, but just not a lot of trading, not a lot of activity today.
Jacob, what's the best way for our viewers to get more great analysis from the market side of things?
Well, you can look us up on any social media. We encourage guys to go to our website, look up and sign up for our 30-day free trial of our agmarket.net intel. So it's agmarket.net intel. You can look us up there. You can find all of our email addresses there. Personally, if you look at me up, 608-384-5438, we'll get you directly to me.
He is Jacob Burks of agmarket.net. Jacob, thank you for the time as always, and have a great Thanksgiving.
Hey, you too. Thanks for having me. Happy Thanksgiving, everybody.
That was Jacob Burks of agmarket.net with our final market recap for the day. It's time now to take a look at the closing numbers, and those numbers brought to us courtesy of the folks at Bar Chart. December corn is down 2 3/4 at $6.56 3/4. Soybeans for January down 7 even at $14.29 3/4. Soybean meal for January down 3 even at $4.05 even. Soybean oil for January up 71 cents at $71.44. Chicago wheat down 7 3/4 at $7.91 1/2. Minneapolis wheat down 2 even at $9.46 even. Kansas hard red wheat down 8 3/4 at $9.25 1/2. December oats up 1 even at $3.99 3/4. On the Merc, live cattle for December up 25 cents at $153.80. January feeder cattle down 95 cents at $181.67. Lean hogs for December up 45 cents at $84.25. Pork cutout for December up 25 cents at $94.60. And Class 3 milk for November up 1 cent at $21.03. And that's been a check of the Ag Market Recap here on Ag Matters PM. We're going to take a quick break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And when we come back, I will speak with fertilizer expert Josh Linville with StoneX Financial. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today, I visit with Josh Linville. He is the Vice President of Fertilizer with StoneX Financial, and we talk about all of the issues concerning fertilizer right now, some of the high prices, the difficulties of storing and moving fertilizer, and we look ahead to 2023. Here today at NAFB with Josh Linville. He is the Vice President of Fertilizer with StoneX. Josh, could you just tell us right now, I know everything with fertilizer and inputs is a hot topic right now in the ag world, but what is kind of your main focus at this point in time?
Yeah, it's a hot topic and high price. And I think that's what everybody's really focused on. And listen, all inputs are extremely high. I think 2023 is going to be one of the highest priced crops we've ever raised. But in terms of fertilizer, one of the biggest stories we're focusing on right now is logistics. Obviously, the Mississippi River water flows has been a big issue, and we've seen that affect fertilizer. We see it affect grains. The world is waking up, or at least North America is waking up to how important our river systems are. And for fertilizer, that's infinitely so. Now, luckily, the Coast Guard, the dredging operations, boat captains, owners, workers have all done a phenomenal job of continuing to run under really tough situations. But unfortunately, the net result is we are moving less fertilizer north per day than what we normally do. Moving less, logistics suffer, that means the price starts to go up. And now all of a sudden, even if we're starting to see some of the prices of fertilizer drop in the Gulf of Mexico, which is where we track most of them, we are seeing some of these inland prices actually move higher because of that logistical problem. And it's not just river. Rail strike is coming up, whether or not that gets averted or not. Truck logistics is always an issue. We continue to lose more and more truckers to other industries. So I think 2023, the biggest story is going to be logistics.
So Josh, you just laid it out for us. Could be, unfortunately, the perfect storm in a bad way, but if that were to come to fruition, would we be looking at shortages? Would we be just looking at prices continuing to climb? What would the situation be?
One of my things I tried to do this year is stop saying the word shortage, only because we operate in a free market. And what I mean by that is that a free market, when things get tight, prices go up to try and kill a lot of demand. The fertilizer market always talks about shortages, and rightfully so, because at a price, things get short. But the higher price kills demand, rebalances that S&D. But I do think there's a situation where if we don't get some timely rains, we can continue to suffer on the river system. That could get worse, and it gets to where inland prices can skyrocket. We talk about losing rail and barge. There's no way to quantify what that would do to inland prices.
Looking at it from a more micro level, Josh, I was talking to a farmer recently who said that, this year we built storage facilities on our farm for dry fertilizer storage for the first time because we just wanted to make sure that we had everything on hand that we needed. Have you seen more of that?
I have. I've got a lot of questions online. I have a lot of questions about that I get asked at different conferences I speak at, presentations. I think it's something people are looking at. Now, fortunately, the farmers have the money to look at building that kind of storage. But especially this year with logistics the way it is, possessions is 9/10 of the law, and that's really going to hold true for fertilizer.
So would you suggest that then to a farmer if they had the means to do so?
If it makes sense. The problem is it's not just building the dry storage. It's also now you have to have the unload facilities and the reload facilities. You have to have the tender truck and the spreader truck. It's not just that building. Of course, that's the one we see and it's most up front, but it really comes down to the operation. Are you large enough to help offset a lot of that cost? And if the answer is yes, then absolutely.
So at a show like this, where you're interacting with everyone that's in the ag world, and of course producers and growers as well, what are they coming up to you and asking you about, Josh? Is it the logistics questions for the most part?
It's logistics. You always get what's everything going to do? And obviously the answer back is I have no idea. I'd probably have a couple houses down in the Caribbean somewhere if I knew where everything was going to go. But I will say when people ask, what do I do? My biggest suggestion is we're going to continue to see volatile times. We're going to continue to see heightened price risk. I look at farming from a manufacturing point of view, input, output. And if we just buy the fertilizer and we don't sell the grain and that grain price falls to the floor, we're in trouble. We've speculated. If we, vice versa. As we look forward with all the volatility that we expect, we're continuing to tell farmers, look at, if you're going to buy some of your fertilizer, consider selling some of that December 23 corn, November soybeans. Offset that risk. That takes the volatility question out of play.
So Josh, we've been kind of, on the downside of things throughout this talk so far. Is there anything that kind of has you a little bit more optimistic as far as where we are with fertilizer and potentially maybe prices lowering at some point in the future?
We've seen it. On the phosphate and potash, we've actually seen global prices sliding almost constantly since late March, early April. We had kind of a disappointing spring. Farmer demand was lowered, their application rates lowered. We dropped our corn acres from what we expected. Globally, Russia has continued to export. China has started to export more. Potash situation equally improving. So we have actually seen some help on that side. Nitrogen, we've seen some weakness here in the short term. We may not be seeing it inland just yet because of logistics, but it is trying to work itself south. It's not as bad as we expected it to be, and I know it is very bad today, and the inputs are very, very high. But based on some of the you look back at January, February, some of our worst case scenarios did not play out, fortunately, because if that had been going on, we're talking significantly higher numbers today.
Josh, is there anything else you'd like to let our viewers, our listeners know about when it comes to just where the fertilizer industry is right now, and I guess kind of the outlook for the, like you said, next year, 2023?
We're going to continue to see a lot of volatility. We're seeing a lot of price risk out there, and we see it from the farm gate. They look at the price and they're like, I don't know if I want to do this. I don't know if it makes sense. We need to start having more conversations with our supplier, now whether that's a retailer, co-op, whoever it is, because while we're looking at it from our perspective, that person is looking at, buying 10-fold, 20-fold on tonnage. And same thing, they don't want to take that price risk. So you start looking at that price risk and them trying to avert that. And then you look at the logistical issues we have. If we try to adopt a just-in-time model, I'm afraid we're set up for failure. And we've always talked a lot about that in the past for fertilizer. We've cried wolf so many times on that story and it never happens. This may be the one we don't talk nearly enough about it. And come springtime, it's like, well, we tried to warn you. We're trying to sit there and say, even if you're not going to buy it today, have more conversations with your supplier. Try and build a game plan of what you're going to need and when you're going to need it. Give the supply chain a fighting chance.
He is Josh Linville with StoneX here at the NAFB Convention Trade Talk. Josh, thank you so much for the time and have a great rest of the show.
I appreciate it.
And that was Josh Linville with StoneX Financial. As for right now, let's take a look at the ag weather outlook. Well, very simply, yesterday was our last very cold day for the next little while. As for the next foreseeable future, as we look at our forecast, we're going to be in the 40s and it's going to feel quite comfortable for this time of year. So let's turn our attention now to the National Weather Service and what it has in store for the next 24 hours. As you can see from the National Weather Service, a warmer day around the state of Iowa today. High temperatures in the upper 40s and mid 50s. Tonight, partly cloudy to mostly clear skies. Tomorrow will be another nice day, and in fact, it's going to look very similar to what we saw today around the state of Iowa. High temperatures in the upper 40s to mid 50s. And turning our attention now to our affiliate map, tomorrow, Cherokee will be sunny and 51. Shenandoah sunny and 55 degrees. Des Moines also sunny and 53. Albia sunny and 55. Waterloo, sunny skies, 48 degrees. Clinton, sunny, and 54. For a more detailed forecast in your part of the state, check with your local Iowa Agribusiness Radio Network affiliate. And that's been a check of the Ag Weather Outlook. And that also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. You can also follow us on social media on Facebook, Twitter, and TikTok. And you can find all of our video content and previous episodes as well of AMPM on our YouTube channel. While you're there, don't forget to subscribe, hit the notification bell as well, when we can then let you know whenever we have new content available. Don't forget our free twice daily market podcast. Those are found on Apple, Amazon, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Mark Magnuson. On behalf of Riley Smith and Dustin Huffman, thank you for watching. This has been Ag Matters PM.